Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came in this morning, futures were down 7 to 9 handles. We actually did a lot of sideways action. A lot of the indices could not fill their gaps within the first hour. They did bounce off their lows, but basically meandered all day long, and then you had a brief sell-off to test the lows of the day. Bounced off there, and it just really was just another down day, a distribution day. We haven't had a lot of distribution days, so when we have them, they're a little alarming. But within the distribution day, you still had your haves and you had your have-nots. You still had stocks that actually bucked the trend and gave you nice trades, and then you had stocks that have been technically breaking lower, technically below the moving averages, and you've had some shorts and some longs. It all depends on what you want to do and how you want to play it. As far as the indices, we talked about the spiders, how 139.40 to 139.70 has been the support. Well, today it turned into the ceiling, and that's what happened. Support turns into resistance. So if you take a quick look at the chart of the spiders, you will see that we opened up below this upper floor, and then we really couldn't get back above it. Now, if you take a look back from where we put our low in back in October, we've been in this methodical uptrend the entire way. And then you have this momentum uptrend that we broke below once. Look what happened the last time we broke below the 10-day. You had another down move into what was below the 20-day into some support. And then you look here now, it looks a lot the same. It looks like we could continue to the downside, and that's why you have to be a little bit prudent. A lot of things are actually breaking down a little bit further than you would know. Okay, so first of all, next spot I see for the spiders would be a retest of this prior breakout, right here, which is about 138.20, and that also lines you up with the 20-day. On this one, we actually went below the 20-day, so we have to see from a higher level what happens here. And you still have the 50-day moving average, the 50-day moving average moving up. So there's definitely some room to go if this market wants to go. Like right now, I'm not so set on the fact that it's going to be a deep and crazy correction. But at this point, last night I was more net short. Today I'm a little bit more net long, actually. Last night I saw the little breakdown at the end of the day. I threw on a lot of Q short. I threw on a lot of spiders short. And really on the open, I tweeted about what I like to do is I covered half of my shorts, on the down open, and then I wanted to figure out the action. And then once we made new lows, or at some point around 10:30, I'm like, I'm going to get down to 75% covered, have a hedge on still, and see if I can find some things that can go positive, some relative strength areas where there actually were a lot of them. But before I get into some of the strength, I want to talk about some more of the weakness, because people who look to short stocks don't look to short the strongest ones, look to short the weak ones. They're the ones that work. Same way you look for relative strength to buy for the upside, you look for relative weakness for the downside. And right now the Dow has actually been acting worse than the Qs and the spiders. So if you look here at the Dow, you'll see that we already have tested here. You already had this rounding top right here that we broke below, and it's already below the 10-day, and we are actually below almost where we had that breakout day way back when. So the Dow is actually leading us lower here. So I don't think that's the end of the world, but you did have a little bit of a doji here where it traded into this gap, came off of there. But so at this point, I think in my note I said if you had a cute short, from this area, this would be an area to cover, and then we'll see how we go moving sideways. But again, the Dow at this point, just so you could realize it, is what's moving us lower, because you do have a lot of energy names in there, and the energy names are really showing relative weakness. I'm no longer in the OAHs. I got stopped out of my last trailer. You look at the OAHs, I'll show you why. OAHs right now, which has been a great trade from remember we did the whole strategy here. This was when we started talking about it. The OAHs, the reverse head and shoulders, left shoulder, head, right shoulder, and a lot of methodical patterns. Okay, tried to get back involved when I tried to re-break here, but it actually failed there. Okay, so if you look a little closer at this macro uptrend, there are some stocks not holding this macro uptrend. Okay, so right here, this is one of the first indices that it closed below. So you have to take a little notice there. You now have a high, you have a lower high, so that actually just reversed, a bit of the trend. So for me, that's a little bit of a sell signal. We'll have to figure out later this year whether or not you can get back involved. Look at a stock like Schlumberger. It actually, we talked about how it was a little bit frustrating at times, and if you look how it was begrudgingly trying to go up, it came back in at first, tested this uptrend, and then gave you a rally back up that wound up making a lower high before failing and closing below. So to me, this is something below moving averages. I know it's off the low today, but this is sort of in a void. And you look at something like Halliburton never even rallied. Halliburton, you look at what the market's done, look where this is. The high for Halliburton is here. I don't know what the stock's telling us, but here's a high, a lower high. This resistance is controlling the stock. And as of right now, I don't care how good the name is, so to speak, but it's below the moving averages. And to me, this is in a void. There's no reason to be in it unless for some reason you're holding it for long term and you want to, I don't know, think about a story. But below moving averages, not for me. Okay, this also, if you try and reach here for what has been an uptrend, because these are the things that I've been trying to follow, here is where it broke below, retested, couldn't get back above, rolled over. This morning I was on with Jill, I talked about the weakness in Caterpillar. Okay, I showed you how you had your high, your lower high below the moving averages. It came down, and it was a decent short. Some guys I know took it home short because it closed below the 50. That hasn't happened a lot this year, so that's a technical change. Boom, it's right at support, so at this point, probably a decent area to look to cover some. But at this point, this is helping to lead us lower. Next spot is this 200-day and then this prior breakout of the channel. So for this, I know everyone loves the name, but there's a time and a place, and right now the time is saying this is weaker than the overall market. Look at something like even like this EOG. Now I'd be a little careful here. Okay, it's starting to break below this channel, and you see the group weak. You see it below the moving averages. Couldn't get above the highs. This is even strong for this group, but I think that actually it's hard to draw. This doesn't really have that many points of reference here, but anyway. Just a little food for thought. XLE, let's see how that one's doing compared to the OAHs. This had a pretty hard break today. This was also at the 50-day high, lower high, hard break. I guess you could do this. No, not really. It's right here. You try and do it. It's not as symmetrical. These things. That's why I guess there's no nothing to match up here. So anyway. With this said, look at the moving averages. It's below, something to be a little just aware of. As far as even the ags, POT, came back up to this resistance, couldn't power through it. I think it's has a lot to prove by holding this prior area. At this point, if this were to break, I think this is still considered a weak stock, considering the lower end of the range compared to this upper end where a lot of stocks actually are. So like the ags still weak, the oil drillers have been weakening, the diamonds and the Dow weaker this time around versus the last time around. This time around, look at the semis. The semis actually are a bit better, right? Last time around, semis broke, remember when it broke this? Okay, came in, tested the 50-day, had a big move through. This is still above a lot of the moving averages. So for right now, the actual semis are showing a bit more relative strength than obviously the Dow. Let's see what the Russell's doing. The Russell, also in the upper end of the area compared to what I just showed you with the OAHs and the XLE and some of the Dow, and it's just very choppy here, to be honest. Not much for me to say here. I'm sure it's very individual as far as names. You look at the XLF, still the strong spot. Now, on a macro, or you want to look at it on a macro and micro basis, on a micro basis, this like small ascending channel that we see on a lot of the stronger stocks that just, or groups just resolved a little bit to the downside. So I would say for the XLF, you want to watch this area. This is the area going across. This would be support 1. This would be support 2. So we'll see what happens, here and here. As far as a wish list for some financials, and for me, this looks very similar. Actually, I drew this morning. This was at ascending channel in JP Morgan, came below it. I would think that my wish list for this thing would be for it to trade down to, what is this low here? This low here is 42.93. that would be an area that I would like to buy it. That would be a little bit below the 10-day, above the 20-day. So really, 42 to 43 if that winds up working out there. There you can see a little closer. Okay, yeah, my lines are a little squiggly right now, but it's been a long day. This is a small little momentum trend break. It's still above the floor, so you still has to get through this 44.21 before it could test a 10-day, which it's been riding. Okay, it's been riding with the little touches of the 20 days. So, for this to stay in the same type of trend, I would think that if we continue lower, this will be buyable about 42.75 to 43 or so. That would be a decent area. And if you look at Bank of America, real quick, it too broke its small little, flag type pattern here. Okay, you take a look here. Obviously, the flag didn't break to the upside. We saw more weakness, and it wound up breaking a little bit to the downside. So here's your upper area around 950. If we were to break 950, I think this could be accumulated between 880 and 910, and that would be a spot to check it out. I don't think it makes it all the way back down to here. That would show not a lot of commitment to this 5-day move. But at this point, you could take some of these lines out of the way, and now it's a little bit of more of an upper channel, okay, where you have your defined resistance now. Okay, you have your upper flag support. If it were to break this support, or maybe it goes descending in nature, I do think 880 to 910 will be buyable. I do think that this dip will be buyable. It's just a matter of where. And obviously, you have your haves and your have-nots. Today, you saw strength in Google. You saw continued strength in Amazon, a little bit, not the continued strength, but decent strength in Amazon. Baidu, on top of yesterday's breakout. I know it closed off the highs. That's why we talked about not getting away from it yesterday. It had a nice day. So there's still a lot of good things going on in the right places. Google right now, if you take a look, it's kind of hard to just go out and buy it. My e-signal's not coming up. I must have just got kicked off. Let's see if you could see what Amazon looks like. Okay, Amazon from a small little micro stance. Okay, here was that breakout above 186, 187, and with the market pulling in, it was green today, flagging. So that shows to me that if we get a little bit of stability in the market above this 194.41, maybe tomorrow could take it to 200. This still looks good. On a macro basis, it's still obviously lagging the entire market, considering this is the high, lower high, lower high. But on a little wedge type basis down here as a short-term market timer, looks a little bit more positive than negative. If you look at Baidu, Baidu's continuation today. Yesterday, it came in at the end of the day, got a lot of people out of their momentum longs, but then today, we talked about this level trying to hold, and it did, and it actually made a higher high, which is healthy. So it shows you that Baidu is still in the game. It just, you have to give things a little bit more time to work out, so maybe do a little less shares. I actually got stopped out of my Baidu, unfortunately, and it was strong. Let's see if we can get Google up now. Google, unbelievable move. At this point, I don't want to see you guys start chasing it up here, but for the macro investor that held in earnings and averaged down, you're looking pretty good right now. I do think at some point it's going to get well above the highs of the year. As a trade, you had a few different entries into the gap. I remember the 591, nice little $10, $15 trade. Here was your sideways channel, broke above it. We started talking about it acting better above 620, and then it hit as high as, what did it hit today? 647. So we'll see. As an investor, stay the course here. I love Google. As a trader, it's a bit choppy, but guys that can handle it have been doing all right. Apple, not too much continuation to yesterday's down move. Like everyone starts getting all scared if Apple's down $2 or $3. Not the biggest deal. This was that small little reversal when it traded above the high here, came below it, and then today it was down. You had a few different trades though. I actually made money in Apple buying it from down $1.50 to up $1, and that was my trade. All I wanted to do is make a little cash flow. I'll show you where it happened. It happened, right after a lot of the high beta names went green. So for me, you have to pick, or for you also, you have to pick and choose what you want to, where you want to make your money and what time frame. This was the first move up in Apple. Okay, it made a little tail low. And guess where it made a little tail low into? If you go back to your 8-minute chart, it was the previous afternoon support, or somewhere close to it, not even. Like if you look here, this was today, right? And let's see, hold on. And this was 3 o'clock the prior day. So actually this is a little bit lower. Where is, hold on. No, there it is. Okay. So if you look here, okay, this was yesterday. Yesterday the low here was, actually no, that's today. I'm sorry. Let's see. This was, I guess, the 12 o'clock support. Anyway, not the greatest gauge. So let's go back. Sorry. Anyway, you know, the way I made my money today in Apple was I came in flat, not short. I was short the Qs instead. You had a bit of a tail right here, wide range bar. I bought right here, okay, thinking that it was going to go positive. Okay, nice little flag, held half of the range. Bought a little bit here, sold some, and then I did it one more time for it to go from negative to positive as it held higher. You know, I bought a little bit in here, added, and then like this little area, and I probably sold somewhere around this area. I didn't trade it all the way to the highs, and that was my day. Then I said, well, not my day, but that was like, okay, I'm done with Apple. You know, I made a little cash flow within the range of this nice, you know, methodical move to fill the gap, and then some in the first 30 minutes. That was your 30-minute strategy as it fully followed a nice path all the way to a little bit above going positive, because this was that going positive line here. And then it really just wedged the rest of the day. It wedged, went sideways, wasn't a lot of action before, you know, breaking down a little bit at the end of the day. Pow. Okay, and then it came off the lows. So we'll see what happens there tomorrow. Something that was a bit more calculated to me was LinkedIn. LinkedIn, you know, that I've been targeting for the course of the past like 2 weeks, had some decent trades. Yesterday was the buy recommendation from Goldman, putting a 130 price target. So today we came in the futures were low. I'm like, you know what, I'm going to use my own pivot point type of strategy where yesterday's low is 97.10. So, you know, once it comes back above that low, that's my buy price, because then it'll have a tail in the gap, and if it holds the gap, that's bullish to me. So if you look here at LinkedIn, you will see that go to the daily chart there. Nice little day, right? Here is the resistance that we were talking about buying it above. It opened above it yesterday. You had a nice little, you know, it sold off. It was a hard trade yesterday. So yesterday was the day everyone was like chatting about it, but today was really the easier day. Today is when, you know, it pushed below this this area, this pivot, which was 97. What was this? 97.01. I'm sorry, not 97.10. Went as low today as 96.60. So it was below that low. So when it crossed 97.01, you could have bought 97.01, put your stop in today's low at 96.60. That's a 41-cent stop, and said, I'm gonna let this stock beat me. I think it's strong. It just traded back in this range. And from 97.01, okay, it closed at 100.53. So you could have made $3.50 with 40-cent risk and still be in it, because of it now. If you know, if it starts trading above 101.11, you know, you're going to get a nice continuation move, you know, to the upside to probably 105, 110. I still think this is strong. I think this is something you have to stay with every day, as this is a new issue. It's coming up. You have your next little pivot area right here going into 110, and then you have those IPO highs. It's now been, you know, how many months? June, July, August, almost, what is this? Almost a year. So it's been accumulated. It's been, you know, this lockups have happened. You've had a lot go on. You have Facebook coming up. So at this point, I do think here's your next area. So above 101.11, that's your add for maybe a cash flow trade to 105, and then 110. Could happen tomorrow. I will not be here tomorrow. I'll be in Florida going for a wedding. But closed well today. You saw our stock close near the highs when the market closed near the lows. That's relative strength. That says something that you need to be watching. Intel looks interesting too. I entered today. Not sure I wanted to be in so many different stocks because I think we're still in corrective mode, but it looks like not much of a correction here with Intel. Nice flag, nice sideways action right here. If this starts to clear 27.95, you could see, you know, new highs in Intel. So at this particular point, it's definitely choppy, but it held this little prior breakout. Flagging could continue. Switch gears. You know, for the last few days, I've been in Microsoft, which, you know, I'm trying to buy this 3-day pull-in. So here's Microsoft. Here's your 3-day pivot. The low here is 31.74, so I'm long. And either, I'm not sure exactly how I'm going to treat it. If it breaks below 31.71, I might get out because I think I'll be quick enough to buy it back here. But if it holds here, goes, you know, and stays in that area, and the market gets a little bit of its footing, I'll probably add through this for then what could be another move. If it can't get back above this 3230 area, chances are it might have more corrective action. So, it's worth a try. 3 days down, it's been viable. Look, what? 1, 2, 3 days down, viable. Here, 1, 2, 3 days down, viable. Here, not even so it's worth a try. Instead of, you can't pay up and chase excitement in mega cap tech, so at least you could try and buy a controlled pullback and have an out. And for guys not committed that don't want to go from tier 1 to tier 2, there's your stop, 30 cents, and you can figure it out from there. So with all that said, it's Thursday. It's been a really good quarter, and it's been a really good few weeks. So at this point, if you want to be in a little protective mode because you're not seeing it, that's fine. There's definitely been some money from the short side, in the indices last night into today, in some of those drillers and some of those other names. Not really in high beta tech yet. So, some of them you can make some cute shorts, but it's really not been the trend. And just know what you're looking to close your month at, your quarter at. If you're going to be trading scared, don't really trade at all. For me, I have a little less risk on. I really wanted to pare down more positions than I have going into tomorrow because I'm not going to be here, and then I got to come in Monday. So it's just, but a lot of patterns drew me back in. Could not be in LinkedIn. Microsoft looks fine. Intel looks like it's ready to break out. I'm still have my trailer in Dunkin' Donuts and Caesar and Zynga. I like all three as a concept play. They all have secondaries coming, but I have feelers there to watch the action because I think they're going to be higher this year. They're just kind of on my C list right now. I'm still in the TBTs. So remember this morning I said, if it's any good, it shouldn't come all the way into here. Well, thank God it didn't. And it's still holding this gap. I know we talked about 2150 to 22 is resistance for the TBT, and that's where it went to. This was, your buyable take home, and that's where I've been holding it from when it closed above 1970. From here, not a blockbuster trade, but went as high as 2155. So if you sold some strength, if you were in tier 2, you get back to tier 1, and that's what I'm in right now. I'm in tier 1. I think as long as it holds this gap, you're going to see this whole concept stay in there. I know Sperling's shorting the TLTs, and he did so right around here. Same concept, thinking that this gap's going to control this downside move. So he's shorting in front of there. You had a really big breakdown here. So remember we talked about this breakdown, the highs, lower highs, lower highs, lower highs, below the moving averages. Said this would be support 1 to cover, right? Nice cute trade. Then perhaps you get a little bounce. Now it'll be interesting to see if this continues. So stay tuned. So with that said, you could pick your poison. You could pick what you want to do. I apologize. I feel like I'm a little tired today, a little lethargic. It's just been a long week, a long month, and I could use a few days off in Florida, go for a nice run, go for a nice swim, a wedding, little family time, and that's what life's all about too, is knowing when you're feeling a little burnt and you want to take a little break. And thank goodness I happen to have a wedding in front of me where Chase is going with Nona, and you get a little wife time with the family. So all good. So I won't be here tomorrow. I won't be on the radio. And, but you could see my positions on the virtual floor. I'll be able to, call some things in to see things disappear. And I will try and tweet from time to time, but you'll probably have a lot less of me tomorrow because I'll be on a plane, I think, around 11 o'clock. So I'll be out of commission till, probably 2, 3, 4 o'clock even. So with all that said, hopefully if you've been watching from the Twitter sphere, from all our affiliates, you've been getting consistent, great content. That's what we try to do. Just be honest, give you plays that have a high probability of working out, not even plays, setups. I like to call it a setup. And tomorrow, just realize that, we'll not be here. Tune into Evan, tune into Mark, tune into the other content providers, because I'm sure they'll guide you through, the markets with the same type of consistency and professionalism. So Thursday night, have some fun. It's the Northeast. It's beautiful out. Go out and then, just make sure, again, if you're involved, don't fall asleep at the wheel, because this is a little bit of a tricky spot. Have a good night.